Hello traders and investors, I'm LA Little and this is your daily NeoTA wrap. Take a look at these markets from a neoclassical perspective, looking at supply and demand on the charts, asking ourselves what does it tell us about the coming days. We do a show 4 times a week every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube and under the channel LA Little. If you want to subscribe to the show and you haven't, just reach up in the right hand corner, do so. Anytime I push public content, you get a notification. As far as what happened today, it was another day of up, and that's kind of what it's starting to be, right? Day after day, if you remember, before the election, we had 9 days of down. Well, now we're doing the exact opposite. Maybe we're going to get 9 days of up. Up on the NDX, up on the S&P 500, up on the Russell, up on the NASDAQ, up even on the Dow. It didn't matter. Where it mattered was over here, gold and silver, down again. I told you 2 or 3 days ago, forget this. This is under pressure, and it continues to be under pressure. And a big part of that is the dollar. The dollar just keeps going higher. So we get the dollar pushing up towards the highs of its range. We got gold, oil. It doesn't matter, right? These commodities are getting hit. What we're seeing also with the bonds is continued rotation out of almost everything into equities. It's all risk on. I've pointed out the last couple of days what can happen when you get that kind of risk on situation, and I'm going to pop it up here again. Dry ships, right? We were talking about the shippers, and we're talking about how crazy this has been. Well, I told you, last night, matter of fact, I said if you hadn't been taking profits, I don't know what you're thinking. If you happen to have been in this ride. Folks, this went from, this is insane. 4 days you go from $4.75 on the low to a high of 102. I can't even do the math. I don't even know what that percentage is. Well, whatever that percentage was, it's 133 the first day, then another 215 here, and then another 70. Well, today, 84.93 back the other way. This is going back to where it came from, and I said it would. I figured it'd take a couple weeks. Maybe it's going to take a couple days at this rate. If you play with fire, you're liable to get burned. Anybody that came into this late, I'm sure they got scorched on the way out. Let's look at the indexes here. So for a second day here, I've got volumes coming in late for some reason, but anyway, we'll just manage. Volume was about equal with yesterday, not that much difference. But today you extend and you get over. Last night, and actually the last couple nights, I know I told members this. We were going to be watching this. We wanted to see it get over this high volume high and stay over it. Well, not only did it get over it, it stayed over it and stayed well over it. Right, this extension that started continues. It hasn't even slowed down. You don't have a B point yet on any kind of an ABCD structure. This just keeps barreling up. The last place it's going to try to get over is just right around the corner here. And let's get this lined out so we can see it completely. And that is this high, which is 2,187.87. We're trading closing at 2,176. That's where it's heading next, and once it's over that, there's nothing left, right? You take off the highs, you make new highs. So S&P doing exactly what you'd want, and that is remaining extremely sticky to the upside. Russell, you talk about sticky. This thing is like glue. Again, volume is going to be about the same. Gets over the price point where it possibly could have failed, stays over it, wants to go higher. So what do we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9 days straight up without a break. NDX. Now, it hasn't been that swift on the NDX. We actually got the push back up again today. This one's going after this big reversal bar. It was a takeaway bar. It's trying to go back after it. That was when they started selling tech real hard. They continued for the next 3 days. Now it's back the other way. And it comes back the other way, right? You can tell it's tech, a big cap tech. That's the problem because If we pull up the NASDAQ, which is the broader measure, you can see not only is it at, almost at new highs, there's clearly a divergence here between the general tech and big cap tech. Gets over its high as well. Volume, I believe volume is a little bit lower here. I don't think it was that low, but it's going after the swing point highs. And so it gets over one a day. It's going to change its trend back to sideways, and as soon as it gets over these, it will go back to bullish as well. Sectors lead the markets. Most of the sectors have turned bullish again. Stocks lead sectors, and as we know, those all turned bullish on that big run up. So there's nothing here that I can see at this point telling us that anything different is going to happen. This market is trailing higher. Price is sticky. If it's going to consolidate, so far it's going to be a bias to the upside consolidation, just grinding kind of slowly up and doing its consolidation in that form. Will we get a pullback? Well, usually you always do somewhere, but you know, this could go 10, 12, 13 days. Who knows, right? I was talking to some folks the other day and saying, you know, this is a market you just have to buy. You got to find ways to make purchases. And I've been telling that to members. We've been making purchases where we can. We've been selling out some stuff that's weaker because when we do get a pullback, that stuff is the stuff that's going to go down. I relayed to you the whole idea about gold and silver. You know, why do you want to try to play in something like that when you've got the rest of the world moving higher? You know, play the strength folks. Always remember, one of the basic rules is you go with the strong. You try to avoid the weak and you go with the strong. I was pulling gold up here to see what it did today. So it goes down. Yeah, you might get a bounce finally. 1549. You finally get an undercut here. 1544. You close over it. That looks like it's probably going to try and bounce. If you wanted to buy gold, today was the day to take a shot at it. But again, why mess with it? I mean, there's better trades elsewhere. The reason it probably will get a bounce, if it does, is because the dollar is reaching up to the sky. Here's the daily, another skyrocket up. It's going right after that high. I suspect tomorrow it's going to try and test it. 26.14. It closes 26.10, just 4 little pennies away. If we bring over the monthly chart, that's the high it's going after. The top up there's 26.50. Whether it gets to 26.50 on this run, I don't know, but it's going to become more and more of a problem if it continues to run straight up. Now, it doesn't look like that big of a run here. It certainly looks like more of a large run here. And if you go to the daily, and let me pull the daily back. There we go. It certainly seems like more of a run here. Tailing off on volume, right, as it grinds higher. But as long as the momentum's there, these things can continue, and then eventually they'll fall back. This, of course, reminds you of that DRYS that we just looked at, but this one's not on steroids like that one was, right? Those things will come back. This one will too. They always do. But when they're not running on steroids, sometimes it can take them a while to actually make that turn and head back the other way. Emerging markets, again, stay away from the weak. They're weak for a reason, right? Whatever is driving this down, you don't have to understand why. That's what neoclassical is all about. You don't need to understand why. You just need to understand what it's doing, right? Leave the why to somebody else. Let them all guess about why and why it's going to turn or why it's not or whatever. Just look at the volumes, right? Expanding volume as you break. More than 6 bars. If you happen to get back up here, it's a sell. It's not a buy. In other words, this is not a place to have your money, right? Certainly not on the short term. If we look at the intermediate term, yeah, you might make an argument here that it's still, you know, reasonably okay. It's not bad, but it's certainly not good, right? You had a bullish retest region here that could not hold, right? When you see that, what it says is that at least on this time frame, what was this way is now that way. And if you know that, that's not where you want to be putting your money. It's certainly not until it gives you a reason to put your money there. Now, you know, you you can always, slice these things farther and farther. If your time frame is the weekly or the monthly, right, you may be starting to consider this because you're going to get a lower volume undercut, right? But you're still going to have that resistance when it comes back, right, that we just saw on the daily. And so as a result, what you really want to do if you want to trade this, if you want to be long the EEMs, right, what you want to do is let it come down, let it bounce back up to that area on the daily that it's probably going to fail. It's about a 92%er. It will fail there and head back. Let it come back down, right? And if it holds, Neoclassic says that's when you buy it, right? You don't try to catch the first bounce because it may not be the real bounce. I mean, this thing, for all we know, it's very easy to think about a different scenario, and that is that what if this is simply a bounce that leads us lower? And that could very well be the case, right? You don't have to catch the first bounce. Let it test on the daily, fail, come back, try to regenerate lower, and then see it hold. And when you get that kind of information, then you can have your back up against the wall and you can take a shot at it. All right, let's see, what else do we got here? We got a strong market. Overseas markets still okay. Some of them hurt by the dollar. Some are still hanging in there. We've got European markets still doing okay. We've got news coming out, in another couple of weeks in Europe that could change things with the Italian referendum. We got a bunch of elections next year that could certainly change things. As the landscape keeps changing, first in England, now in the U.S., right? If we continue to see that type of change where people say, throw the bums out, give me somebody else, get rid of the status quo as we know it, right? The elitism. That's really what this is a backlash against. I'm tired, I'm angry, I'm mad as hell, and I'm not going to take it anymore, kind of a thing, right? As those things come about, March, April next year, elections in Belgium and France, in Germany, if we continue to see these backlashes, especially in Europe, where you have the European Union that may be on the ropes, right, then we could see some issues. So, it's not always good. It will be bad again, but right now, that's not the case. Go with the flow, folks. Enjoy it while it lasts. Have a great one. I'll see you next time. Good night.